We live in an era of rapid technological advancement. One of the most transformative innovations in recent years has been the rise of digital currencies. Among these, central bank digital currencies, or CBDCs, are gaining significant attention. They are poised to reshape the global financial landscape as we know it. CBDCs are essentially digital versions of a country's fiat currency. They are issued and backed by the nation's central bank. Unlike cryptocurrencies like Bitcoin, which are decentralized and operate independently of governments, CBDCs would be directly controlled by central authorities. Imagine a world where you no longer need physical cash. Instead, you could make instant and secure transactions using digital currency issued by your own government. This is the promise of CBDCs. They aim to provide a more efficient, inclusive, and transparent financial system for everyone. However, the transition to a CBDC-based economy is not without its challenges. There are valid concerns about privacy, security, and the potential for government overreach. As we delve deeper into the world of CBDCs, we must carefully consider both their potential benefits and risks. Proponents of CBDCs highlight their potential to revolutionize our financial system. They argue that CBDCs could make transactions faster, cheaper, and more secure. Imagine transferring money with the same ease as sending a text message, without the need for intermediaries or hefty transaction fees. Furthermore, CBDCs could promote financial inclusion by providing access to digital financial services for those who are currently unbanked or underbanked. This is particularly relevant in developing countries, where a significant portion of the population lacks access to traditional banking infrastructure. Central banks also see CBDCs as a tool to enhance transparency and combat illicit activities like money laundering and tax evasion. Since all transactions would be recorded on a central ledger, it would become more difficult to hide financial crimes. Finally, CBDCs could provide central banks with greater control over monetary policy. They could implement policy changes more directly and effectively, potentially mitigating economic downturns and promoting financial stability. Not all CBDCs are created equal. In fact, there are two main types: retail CBDCs and wholesale CBDCs. Understanding the distinction between them is crucial to grasping the full scope of their potential impact. Retail CBDCs would be available to the general public, just like physical cash is today. Everyone, from individuals to businesses, could use them for everyday transactions. Think of it as digital cash issued by your central bank. Wholesale CBDCs, on the other hand, would be restricted to financial institutions and large corporations for interbank settlements and other large-value transactions. They would primarily serve as a more efficient and secure alternative to existing interbank payment systems. The choice between implementing a retail or wholesale CBDC, or both, depends on a country's specific economic needs and policy objectives. While retail CBDCs hold the promise of greater financial inclusion, wholesale CBDCs focus on improving the efficiency of the existing financial system. While CBDCs offer potential benefits, they also raise significant concerns about privacy and security. Critics argue that CBDCs could give governments unprecedented access to citizens' financial data, potentially enabling surveillance and control. Imagine a government having a detailed record of every transaction you make, from your morning coffee to your monthly rent payment. This level of financial transparency, while potentially useful for combating crime, could also erode individual privacy and autonomy. Another concern is the risk of cybersecurity breaches. As with any digital system, CBDCs would be vulnerable to hacking and data theft. A successful attack on a central bank's CBDC infrastructure could have devastating consequences for a nation's economy. Moreover, the transition to a cashless society could disproportionately impact vulnerable populations who rely on cash transactions, such as the elderly and those without access to digital technology. It's crucial to ensure that the implementation of CBDCs doesn't leave anyone behind. Tracking and controlling, a social credit score in disguise, examining the debate on CBDCs and financial surveillance. The potential for CBDCs to enable government surveillance has sparked heated debate, particularly in the United States. Some fear that a CBDC could become a tool for social control, similar to China's social credit system. Imagine a scenario where the government could restrict your access to financial services, or penalize you financially based on your political views or social behavior. This Orwellian vision underscores the importance of robust privacy protections in any CBDC system. Proponents of CBDCs argue that privacy concerns can be mitigated through technological solutions such as encryption and anonymity-enhancing technologies. They emphasize that CBDCs can be designed to protect user privacy while still providing the benefits of a digital currency. However, the debate over the balance between privacy and security is likely to continue as CBDCs move closer to reality. It's essential for policymakers to engage in a transparent and inclusive dialogue with citizens to address these concerns and ensure that any CBDC system implemented respects fundamental freedoms. CBDCs versus cryptocurrencies, a tale of two digital currencies. While both CBDCs and cryptocurrencies exist in the digital realm, they are fundamentally different. Understanding their distinctions is key to navigating the evolving landscape of digital finance. CBDCs, as we've discussed, are issued and controlled by central banks, making them centralized by nature. They are essentially digital representations of a country's fiat currency, backed by the full faith and credit of the issuing government. Cryptocurrencies, on the other hand, are decentralized digital currencies that operate independently of governments and central banks. They rely on blockchain technology, a distributed ledger system that ensures transparency and security without the need for a central authority. This decentralized nature is a key feature of cryptocurrencies, appealing to those who distrust centralized institutions or seek alternative financial systems. However, it also makes them more volatile and susceptible to market manipulation. Keep in mind the key differences between CBDCs and cryptocurrencies is centralization versus decentralization. While they both represent innovations in digital finance, they serve different purposes and appeal to different segments of the population. The United States is actively exploring the potential of a digital dollar. The Federal Reserve has been conducting research and development into CBDCs, signaling a potential shift towards a digital future for the US dollar. While no official timeline for a digital dollar has been released, experts predict that the US could launch a CBDC within the next decade. The Federal Reserve is taking a cautious approach, carefully considering the potential implications for financial stability, privacy, and security. Some argue that a digital dollar could pose a threat to individual liberty by giving the government unprecedented control over citizens' finances. They fear that a CBDC could be used to track spending, censor transactions, or even confiscate funds from those who dissent from government policies. Others counter that these concerns are overblown and that a well-designed digital dollar could actually enhance privacy and security. They argue that the transparency of a CBDC system could make it more difficult for criminals to operate and could provide greater protection against fraud and theft. The debate over a digital dollar is likely to intensify as the US moves closer to a decision. It's crucial for policymakers to engage in open and transparent dialogue with the public to address concerns and ensure that any CBDC system implemented upholds American values of freedom and individual liberty. The US is not alone in its exploration of CBDCs. Countries around the world are at various stages of CBDC development and implementation, each with its own motivations and approaches. China is leading the pack with its digital yuan, which is already being piloted in several cities. The Chinese government aims to position the digital yuan for cross-border foreign exchange payments, potentially reducing China's reliance on the US dollar. Other countries, such as the Bahamas and Nigeria, have also launched pilot programs for their own CBDCs. Additionally, the European Central Bank is exploring a digital euro. These pilot programs are providing valuable insights into the technical feasibility, economic impact, and user acceptance of CBDCs. The global race to develop CBDCs is well underway. As more countries embrace this new form of digital currency, it's essential to monitor their progress and learn from their experiences. The prospect of a future dominated by CBDCs presents both exciting opportunities and significant challenges. As we stand on the cusp of this digital revolution, it's crucial to carefully weigh the potential benefits and risks. On the one hand, CBDCs have the potential to create a more efficient, inclusive, and transparent financial system. They could reduce transaction costs, expand access to financial services, and combat illicit activities. On the other hand, CBDCs raise concerns about privacy, security, and the potential for government overreach. It's essential to ensure that any CBDC system implemented includes robust safeguards to protect individual rights and freedoms. Ultimately, the decision of whether or not to adopt CBDCs is a complex one with far-reaching consequences. It requires careful consideration of a wide range of factors, including economic impact, social implications, and ethical considerations. As the world moves closer to a digital currency future, it's essential for individuals to take steps to protect their financial freedom and privacy. While the specific actions you take may vary depending on your circumstances and risk tolerance, here are some general guidelines. Stay informed. Keep abreast of developments in the CBDC space, including government policies and technological advancements. The more you know, the better equipped you'll be to make informed decisions about your finances. Explore alternatives. Consider diversifying your assets beyond traditional banking systems. This could include investing in precious metals, cryptocurrencies, or other alternative assets that provide a hedge against government control. Advocate for privacy support organizations and initiatives that promote financial privacy and fight against government surveillance. Your voice matters in shaping the future of digital currencies. Practice digital hygiene. Protect your online accounts with strong passwords, two-factor authentication, and other security measures. Be cautious about phishing scams and other attempts to steal your financial information. Support local businesses. Patronize businesses that accept cash and other forms of payment that are not subject to government tracking. By supporting businesses that value privacy, you can help create a more diverse and resilient financial ecosystem. The transition to a CBDC-based financial system is a significant event with the potential to reshape our world. By taking proactive steps to protect your financial freedom, you can navigate this transition with greater confidence and autonomy.